Hello and welcome. My name is Adrena. I am the owner and accountant here at Accounting by Adrena. And thank you so much for being here. I am going to be answering a question that was written into my YouTube channel. And I love when you guys write me questions that are super specific, because then I can give you like a pretty specific answer. And for this one, I actually have a little bit of a story that I wanted to share with you. But first, I wanted to let you know that I have a weekly newsletter that gets sent out every single week, and it just informs you of new YouTube videos, new blog posts, any kind of thing like that, special things that are happening over here behind the scenes at Accounting by Adrena. So once a month, I also send kind of like a freebie that I think would be helpful for you. So if you are interested in that, you can go ahead and subscribe to my newsletter that is down in the description box. And on that note, if you're not already subscribed to my YouTube channel, please subscribe and make sure to like this video so I can do more videos like this. I absolutely love filming these kinds of videos. So first, let's hear her question. All right, her question says, this is from Becca Kemp 1234. Thank you for this video, one of the more helpful ones out there. The question is there a way to have a certain set percentage of each incoming transaction, credit card, online sales, automatically moved into business savings or automatically deducted/calculated so a final amount can easily be viewed? Now, I think there's like a couple of components that I want to touch on this. And the first is actually a story that I would like to share with you. So when I was sort of like getting my business up and running, I actually had signed on with a client who had split finances with his wife, and they had it was like a contractual agreement. So each kind of transaction amount that would come through would need to be split into two different ways. So a 70-30% split or a 50-50% split, depending on what it was and which bank account it was. And the way that I managed that, I actually used how like splitting a transaction. And I have a couple of videos on how to split a transaction or a recurring transaction. So I'll go ahead and link those videos down below as well if you're interested in seeing that. But I basically just split it according to the banking screen. So when a transaction would come in, I would split each of those line item individual amounts. Now, the interesting thing is, I think there's a much easier way to manage this than using that split feature in QuickBooks Online, because I really felt like that was a little bit of busy work, and I thought like that was getting too nitty-gritty and like down in the weeds. So we will get to what I would have done, what I ended up doing in a little bit, but I wanted to also mention, because this question is actually talking about like actually moving the money from one bank account to the next. Now, I just want to make sure that we're really clear that QuickBooks can only like pull data. Like it's not like transferring actual cash. So it's only a reflection of what's happening already in your bank account. So let me just go ahead and share my screen, and then I can dig into further details about this specific point. All right, so I am using the test drive version again, as usual. And what I kind of wanted to just show you is, this is the banking screen that you see in QuickBooks Online. And this isn't actually doing anything to your bank account. It's not actually pulling money, into QuickBooks. Like I have no way of like connecting, and transferring actual funds from your bank account. This is just pulling the data so we can categorize it for the purpose of financial reporting. Okay, so I just want to make sure that's super clear. This is just a mirror of your banking account, your checking, your savings, your credit card, whatever you have connected to QuickBooks. This is just mirroring that. And it's a way for us to easily categorize each of the transactions that come through in order for financial reporting to happen. So I want to make sure that that's super clear. So in order for you to actually like transfer money to your business savings account from your checking, you would actually have to go in and log into your business checking account or your business savings account and do that transfer, technically speaking. Now, if you are using a CRM system, like if you're using like Stripe outside of QuickBooks or something else in order to capture, let's say you have products in, Shopify or something, and Shopify uses Stripe to transfer the funds from someone who's purchasing from you to your bank account, then the transfer would come in through Stripe. So maybe Stripe does like a net total of like whatever product that they're purchasing. So let's say that they're purchasing a $10 calendar from you and it's on Shopify. So they go into Shopify, the customer goes into Shopify, purchases the $10 calendar. And then behind the scenes, Stripe says, okay, customer A purchased the $10 calendar, but we're going to take a 2.5% fee. And so you end up getting, $8.50 in your checking account or whatever the case may be. You do the math. So if that is the case, then you would see coming through here in your bank feed that it would be received at 8:50 on whichever day the calendar was purchased or whichever day Stripe decided to do the transfer. So again, those are kind of like separate systems. And so there's no specific way that you could, do that automatically unless you set up like an automatic transfer, in your checking or savings account on a monthly basis. So what I normally do in terms of moving money into my savings account, I just do that on a monthly basis. And I have a checklist and that's what I follow. So maybe we could talk about my checklists a little bit later, but I wanted to make sure that we were pretty clear on like what QuickBooks does and what QuickBooks doesn't do. So in order to show you exactly what I would do, I want to show you the report side. And I believe I have showed you this before in another video on reporting. But so let me go back. Once you have all of the banking transactions updated for that prior month, so let's say we're in March and we're working on February data, then make sure February is cleared out and you've reconciled your checking account already, and you want to transfer a certain percentage from your checking into your savings of all sales that came through. So then you would come over here to reports and you would take a look at your profit and loss, and it would only be, the filter would only be last month. So then we go ahead and run the report. And let's say it's before cost of goods sold. So just for the month of February, I would come in here and I would look at this and it says 442730. Okay, great. So then a certain, let's say 10% of that is going to go to your savings account. So you would just go and log into your bank account and transfer that 10% from your checking into your savings account. And then that would also come flow through your QuickBooks banking screen. So that's kind of like how that would work in practice. And the last thing that I wanted to say to this point is when you have so many transactions, let's say you have like 100 transactions coming through in terms of your sales every month. And if you wanted to do like a certain percentage of each of those little transactions into a savings account, that could create somewhat of a bookkeeping mess. And so that's why I wanted to recommend looking at it on a monthly basis versus the per transaction basis, because it's gonna save you so much time, so much of a headache, and so much of a bookkeeping mess. So if that is the case, then you want to make sure that the previous month is completely closed and that you can just come in here and look at your profit and loss and do that transfer. In fact, I actually have a client that does something similarly where they are transferring a certain percentage of their total sales into a charitable donation as a charitable donation every single month. So this is what they do. They come here and they look at their total income, and then a certain percentage of that automatically goes to a charitable organization, I mean. So yeah, there's just I think looking at it as like a whole month versus individual transactions is going to make your life so much easier. So what I did with my client that I told you guys about in the beginning is I would actually download this data, and then I would say, each of these, whichever lines were 70%, and then whichever lines were 50-50, or 70-30, and then 50-50. I just had a spreadsheet that would calculate that total, where did it go? Total income amount, and then split that out 70-30 or 50-50 according to the terms of the contract. So that is how I managed that. I thought it was just like the easiest way to do it, looking at it on a monthly basis versus per transaction basis. So that is all I have for you guys today. Thank you so much for watching. And if you have any further questions, please feel free to drop them down in the comments below. Make sure you like this video so I know that I can do more videos like this, answering really specific questions, and have a wonderful afternoon. I'll talk to you soon.